Hello friends, after learning the applications and limitations of technical analysis, now we are going to learn about some core assumptions that is very important for technical analysis. But if you don't know about the applications and limitations of technical analysis, then I request you to check out the video from the I button. Now let's get started. If you are here this voice for the first time, don't forget to hit that red subscribe button and turn on the bell notification to get interesting finance videos. In fundamental analysis, it is important to analyze if the stock is undervalued or overvalued. But in technical analysis, it doesn't take care if the stock is undervalued or overvalued. The only thing that matters here is the past data. Now what does it mean? Technical analysis is based on 4 key assumptions. If you are aware of these assumptions, no one can stop you to become a successful trader. Sounds exciting, right? And watch this video till the end to know about the most interesting assumption. Let's discover them one by one. Key assumption number 1. Market discount everything. This thing tells us that all information in public domain, no matter is it known or unknown, is reflected in the latest stock price. Let's understand this situation with an example. Assume one insider of a company buying stock in large quantity secretly. So for this buying, the price of share reacts and other traders start buying these shares because they expect the companies may be going to doing well in future. Now key assumption number 2. In technical analysis, how is more important than why. If we continue our previous example, no one can interested in questioning that why the insider bought the stock, because they know this buy can push the share price to the higher levels. Now key assumption number 3. Price moves in trend. All major moves in share market is the effect of trend. If you don't know about the different trends, then check out my video here. Assume our Nifty index moves from 9,000 to 11,000 in 6 months. Now we say it is in an uptrend. Once a trend is established, the price moves in the direction of the established trend. Now the final assumption, and it is the king among all the assumptions. History tends to repeat itself. In technical analysis, the price trends that I explained earlier tends to repeat itself. Let's understand this with a practical chart. Here this is the monthly chart of Nifty 50 index. Here in 2008, after a huge fall in Nifty, it started recovering. The price again started increasing. In the same way, after a massive fall in 2020, for this pandemic, the price again started increasing like it did in 2008. Now I hope it's clear to you that why it is called history repeat itself. These are the 4 success keys that make you a successful trader. In the upcoming video, we explore the chart and price patterns. So don't forget to hit that red subscribe button and press that bell icon to get notified. If this video had any value to your life, hit that big fat like button and share this video to your family, friends and colleagues. Thank you so much for watching this video, guys.